them all what I'm made up. Strut down the hall, won't stop till I get enough.
Well, yesterday was kind of wild, right? I mean, one of those days where the market just, I don't know, throws you for a loop. Did you see like the Dow down over 1,300 points?
Yeah.
The S&P 500 and the Nasdaq all kind of tanking.
It was a pretty significant day in the markets.
Yeah. And if you're listening to this, you're probably, like a lot of people, trying to figure out, like, what happened? What does this mean? What caused it?
Yeah, absolutely. I think the main culprit, it seems, is President Trump's Liberation Day tariffs.
Okay.
What really caught the market off guard was how big these tariffs are, how steep they are. And that really sent shockwaves through the economy.
Yeah. So for this deep dive, we've been combing through a bunch of news articles to try and break this down, right, as it happened. Like, what are the immediate repercussions? And really what we want to do is try to help you cut through all the noise and really understand what are the key drivers behind this market reaction? What are the sectors that got hit the hardest? And then, what could the long-term consequences be? So maybe to start, why don't we just, break down what these tariffs are? Like, what did President Trump actually announce?
Okay, so there's a kind of two-pronged approach here.
Okay.
First, there's going to be a 10% tariff on imports
Okay.
from all U.S. trading partners. So that's part one.
Right.
Then on top of that, there's potentially even higher tariffs for countries that are seen as, bad actors, like engaging in unfair trade practices.
Okay, so it's like this baseline of 10% for everyone, and then depending on who you are, it could go up even more from there.
Exactly.
Okay. So, I mean, these weren't just like proposals. You put dates on these, right?
Right.
Like, when are these actually going to take effect?
Yeah, you're right. So the initial 10% tariffs, those are set to be implemented really soon on April 5th.
Okay.
So in just a couple of days.
Wow.
And then shortly after that, on April 9th, we'll see the second round of tariffs, so the ones targeting those bad actors.
Okay, so this is happening really fast.
Yeah, it's a pretty quick turnaround.
Okay. And you said all U.S. trading partners. That's a lot of countries, right?
Yeah, it is. Sources indicate that about 185 countries will be affected by these new tariffs, these new import duties.
I mean, if you think about it, like, that's the highest effective U.S. tariff rate in, like, over 100 years.
Yeah, it's huge. It's a fundamental shift in the way we approach trade.
100 years. That puts it in perspective. But, I mean, there must have been some exceptions, right? Like, were there any countries or specific things that were left out of this?
Yeah, there were a couple of pretty notable carve-outs. Canada and Mexico were excluded from the new tariffs.
Okay.
And also specific commodity areas like steel, aluminum, and lumber, those were also exempted.
Huh. The lumber one's interesting because, we're going to talk about some of the companies that were affected, and some of them are related to housing. So interesting that lumber was kept out of this.
Yeah.
Okay. So we have this huge sort of global sweep, right, with a few kind of key exceptions. Yeah. Let's talk about, how did the market react to this? I mean, shockwaves, feels accurate, I think, based on what we saw.
Yeah, absolutely. We saw a massive sell-off, like across the board in all the major indices.
Yeah.
The Dow, the Nasdaq, the S&P 500, all, taking pretty significant hits.
Right.
And what's really, really interesting is how the tech sector reacted. The Nasdaq really led the way down. And it shows just how sensitive that sector is to trade policy and these global, economic concerns.
Right. And it wasn't just, tech stocks in general, like the big guys, the Magnificent Seven.
Yeah.
They lost a ton of value, right? We're talking about $800 billion in market cap, just poof, gone. I mean, can you break down some of those? Like, what were the individual losses there?
Yeah, I mean, so Apple, for example, their shares fell over 9%.
Wow.
And reports are saying that puts them on track for their worst day, like since the start of the pandemic in 2020.
Oh, wow.
And then NVIDIA, they saw a big drop too, 7%.
Okay.
Amazon, similar decline, about 9%.
Okay.
Alphabet and Tesla both fell around 6%.
Okay.
Meta, they saw a smaller dip, 3%. And even Microsoft, who, relatively speaking, did okay, they were down just under 2%.
So, I mean, I'm seeing a pattern here, right? It's like all these massive companies that make up so much of the global economy, they all fall at the same time. And I think that signals that there's this widespread fear, right?
Right.
That earnings are going to get disrupted, that, future growth is going to be hurt by these tariffs. It's not just like one company's problem. It's this big picture problem.
Exactly. It's a macro level concern. It's not just micro.
Yeah.
And specifically with Apple, they rely so much on their supply chain in China, right?
Right.
And so this new tariff, it pushes the effective rate on some of their key imports from China up to, get this, 54%.
I mean, that's got to be a major concern.
Yeah, definitely. Mainly because, it could really disrupt their production, increase costs. And, it's interesting, Wedbush analyst Dan Ives, he was saying the big question now is whether or not Apple's going to get some kind of special exemption, right? Or some kind of exclusion, especially because they had announced back in February plans to, expand manufacturing in the U.S.
I see.
But even with those plans, their current supply chain, it's so centered around China. It's a huge challenge for them in the immediate term.
Right.
And also, the reports mention that even though Apple has been trying to diversify, moving some production to India, Vietnam, these new tariffs, they applied to those countries too.
So it's not really a way out for them.
Exactly. And you have to remember their supply chain is so complex.
Right.
Like, think about one iPhone. It's made up of parts from all over the world, and then it's assembled in China.
Yeah.
So these tariffs are like taxes at every stage of the journey.
Okay.
Which means that the final price, it's going to go up.
Right. And it wasn't just Apple, right? Like chip makers, like NVIDIA, they were down too.
Sure.
And I'm guessing it's kind of the same story, right? They have these global networks, and it makes them vulnerable.
Exactly. I mean, the semiconductor industry, it's all about these highly specialized, interconnected supply chains.
Mm-hmm.
And these tariffs can just completely mess up the flow of components, the materials.
Access.
It all leads to higher costs and even, production bottlenecks for the whole sector.
Yeah.
Yeah.
And I mean, we also saw that smaller companies were immune to this. The Russell 2000, the index of small cap stocks, it entered bear market territory, which, I mean, that means that this concern about tariffs, it's not just the big multinational corporations, right?
Right, exactly. It means that there's this broader worry about the U.S. economy as a whole because these smaller companies, they tend to be more focused on the domestic market.
Right.
And so they're more sensitive to any changes in the U.S. economy.
Which, of course, these tariffs threaten.
Right, exactly.
And this wasn't just a U.S. thing, right? Like this market downturn, it kind of reverberated globally.
Oh, absolutely. Markets all over the world, they reacted pretty negatively. I mean, there's this fear of retaliatory tariffs,
Right.
of a full-blown trade war, which obviously could really hurt global economic growth. I mean, just look at the Pan-European Stocks 600 index. It declined over 2.5%. Japan's Nikkei 225, that slumped by 2.7%. It reached its lowest point in months.
So this really shows you how interconnected things are, right? Like the U.S. makes a decision about trade policy, and it has immediate significant impacts around the world.
Yeah, it's like a domino effect.
Let's talk about some specific companies, right?
Okay.
And how they were impacted. RH, the luxury home furnishings company, they fell, like almost 40%?
It was huge.
That's a crazy single-day drop.
Yeah, it really is. And their situation was made worse by the fact that they had just announced a weaker than expected financial outlook. But the tariffs definitely played a part. I mean, their annual report shows that something like 72% of their products are sourced from Asia.
Wow.
And get this, during their earnings call, the CEO, Gary Friedman, he just said, oh shit, okay, in reaction to the stock price falling so much.
Oh, wow.
And then he pointed out that, their sourcing strategy, it's public information, so investors shouldn't have been totally surprised.
It's not every day you hear a CEO be so blunt on an earnings call.
No, it's not.
We also saw some big drops for companies like Target and Nike. And again, this seems to be a theme, right? Companies that source a lot internationally, they're getting hit hard.
Yeah, exactly. I mean, these companies have spent years, right, building these intricate supply chains in Asia because it was cheaper to manufacture things there.
Yeah.
And now these tariffs, they're completely challenging that model.
Right.
And there's worry that prices are going to go up for consumers, profit margins are going to go down for the companies.
Yeah. It makes you wonder how companies are going to adapt, right?
Yeah, it'll be interesting.
Are they going to bring production back to the U.S. or, find other ways to deal with this?
Yeah, it's a big question.
Yeah. Okay. Best Buy, their stock price fell 16%, and they even got downgraded by Citi.
Yeah. I mean, it makes sense, right? Because the expectation is that the costs are going to go up for all the tech products they sell.
Right. So was Citi pretty explicit about that? Like, is that why they downgraded them?
Yeah, Steven Zattone, the Citi analyst, he was pretty clear about it. He said that the tariffs create this really challenging environment for Best Buy.
Okay.
He's worried about their same-store sales figures because, consumers are uncertain. And he also thinks that Best Buy might have to offer more promotions, like to stay competitive if they have to absorb some of these higher import costs.
I see. So it could kind of hit them on both sides, right? They might have to sell things for less, but they're also paying more to get them.
Exactly. It's a tough spot.
Okay. We also saw some pressure on home builder stocks. So like B.R. Horton, Lennar, Pulte Group, and even the broader home builders ETF.
Yeah.
And this is kind of interesting, right? Because we talked about how lumber was exempted, so why would home builders be affected?
Yeah, it's a good question. And while, the lumber exemption is good news for them, the problem is there are still tariffs on other imported building materials.
Okay.
So like steel components, fixtures, all these essential things.
Right.
And those could still push construction costs up,
Right.
which could slow down the recovery of the housing market.
I see.
Buddy Hughes, the NAHB chairman, he acknowledged this, right? He said it's hard to know exactly what the impact will be, but he admitted that the tariffs will definitely increase some construction costs.
Okay.
But he did say he was thankful for the lumber exemption and for the fact that, things coming from Canada and Mexico, those are also exempt.
Right. Right. Okay. I mean, it just shows you how interconnected everything is, right?
Yeah.
Like one policy can have all these ripple effects across different parts of the economy.
Yeah, absolutely.
Medical devices, yeah, I mean, that's not something you would necessarily think of as being heavily impacted by tariffs. But GE Healthcare, Intuitive Surgical, their stock prices went down too.
Yeah, and it seems like pharmaceuticals are okay for now, but medical devices are definitely facing some headwinds. At VAMED, the trade association for medical device companies, they've voiced their concerns and they're trying to get some exemptions or some relief through these trade negotiations that are happening.
Yeah.
Scott Whitaker, their CEO, he said they were disappointed with the tariffs. And he emphasized how important, medical technology is
Right.
to healthcare in general.
Right. And we got to talk about autos, right? Because even though these new Liberation Day tariffs didn't directly target vehicles and parts,
Right.
we still have those existing 25% auto tariffs. And those are still a big deal. I mean, we saw Tesla, GM, Ford, Stellantis, all of them, European and Asian automakers all saw declines.
Yeah, and the auto industry was already dealing with those existing tariffs. So this just adds to their problems.
Right.
Daniel Roska, an analyst at Bernstein, he basically said that he's worried that these tariffs on cars and parts, they're going to be here for a while.
Okay.
And it's going to be this big cost burden for the industry, and it could even affect what consumers pay for cars.
Right. So, I mean, so far it's been pretty much all doom and gloom. It's kind of surprising that there were actually a few sectors that did well. Consumer staples, it seems like that was kind of a safe haven, right?
Yeah, it's a classic move. When, the economy gets shaky, investors tend to go for companies that sell essential goods, stuff that people need no matter what.
Right. Like they're going to buy it anyway. So,
Exactly.
So even if the economy slows down, these companies should be okay.
Right.
And we saw some specific companies within that sector do really well. Lamb Weston, Dollar General, Kroger.
And even Philip Morris. What is it about these companies that made them, I guess, outperform in this kind of downturn?
Well, they're seen as having really resilient business models.
Okay.
Lamb Weston, they sell staple food products.
Right.
Dollar General and Kroger, they're discount retailers. They sell essential goods. And Philip Morris, tobacco and nicotine products. People keep buying those even when times are tough.
Right. Okay, so it's kind of like a flight to safety and stability when the market is freaking out.
Exactly.
Okay, so let's talk about, what are the economists saying about all of this? There seems to be this growing sense of unease, right?
Yeah, definitely. I mean, Evercore ISI, they put out a statement saying that the current bull market is being severely tested by these tariffs, which is pretty strong language.
Yeah, that's pretty serious. And Wells Fargo, they've been pretty vocal about the potential long-term consequences. This isn't just about, a few days of market volatility.
No, they're thinking much bigger picture.
They're convinced that these tariffs are going to speed up deglobalization,
Right.
That means moving away from this super interconnected global trade system that we've gotten used to.
Right.
And it could lead to companies bringing production back to the U.S. or maybe finding new suppliers in different countries.
I see.
So we might become less reliant on international manufacturing.
Right.
And they think this trend is going to keep going, even after, the current administration.
Wow.
And they even talked about the possibility of a tripolar economic order with the U.S., China, and Europe forming their own separate economic blocs.
I mean, that would be a huge shift.
Yeah, it would. And it could make global trade a lot more expensive and a lot more fragmented.
Right. And Oxford Economics, they chimed in as well, right?
Yeah, and they were pretty worried, too. They pointed out that the services sector, it's actually weakening, which is kind of a surprise.
Okay.
Their Purchasing Managers Index, the PMI, it dropped more than expected. And they think this is going to make the growth concerns from the tariffs even worse.
Right.
So they're saying they're probably going to have to lower their economic growth forecast,
Right.
which means the economy is more vulnerable to a recession.
Wow. Okay. And the market itself seems to be bracing for a slowdown too, right? There's been this change in expectations about future interest rate cuts.
Yeah, exactly. The market is now pricing in 4 Federal Reserve interest rate cuts in 2025,
Okay.
which is up from the 2 or 3 that they were expecting before.
Right.
So basically, the market is thinking that slower growth caused in part by these tariffs is going to force the Fed to lower interest rates
Right.
to try and boost the economy.
Okay, let's talk about commodities because there were some pretty big swings there too. Oil prices fell, like a lot.
Yeah, oil prices dropped over 7%, and there were a couple of reasons for that. One is these tariffs, they sparked worries that global demand for oil is going to fall because the economy might slow down. And then OPEC plus A, they surprised everyone by announcing that they're going to increase oil supply even more than they had said before.
Okay.
So all of that together pushed prices down. Rebecca Babin from CIBC, she said that this 54% tariff on Chinese goods, it's a, quote, significant negative surprise, and it's going to really hurt global demand growth.
Yeah. It's interesting, though. Copper was supposedly exempt from the tariffs, but its price went down, too. I mean, why would that happen?
Yeah, that is interesting. Even though it was exempt, copper futures still fell. And I think it's mainly because people are just worried about reduced industrial demand. If there's a trade war, if the economy slows down.
Okay.
Copper is kind of a bellwether for the economy, so when people are nervous about growth, its price tends to drop.
I see. And what about gold? That's the classic safe haven asset.
Yeah, so gold, it actually surged at first after the tariffs were announced. Classic flight to safety. But then it pulled back, kind of in line with the broader market sell-off.
So I guess even the safe havens aren't completely safe in this kind of situation.
Right, exactly.
Okay, last thing. Labor market data. It came out. And it was kind of a mixed bag, right?
Yeah, it was. So initial jobless claims, they went down a bit.
Okay.
Which you might think is good news. But then continuing jobless claims, they actually rose.
Okay.
They're at their highest level since November 2021. And that means that people who lose their jobs are staying unemployed longer.
I see.
Plus, there were a lot of job cuts announced in March, although a lot of those were from the Department of Government Efficiency, the federal job cuts.
Right.
So it's kind of hard to say how strong the labor market really is right now with all this other stuff going on.
Yeah. So, I mean, big picture, it seems pretty clear that these Liberation Day tariffs have really, really shaken up the market.
Yeah, that's the main takeaway. I mean, the fact that they were so big and they're being implemented so fast, it spooked everyone. And there's this fear of a trade war, the economy slowing down both here and in other countries, and these global supply chains getting messed up.
Yeah. I mean, it really shows you just how connected everything is.
That's right.
Like, one country makes a decision, and it can have huge impacts all over the world really quickly.
Yeah, and it makes you think about these networks of trade and production that we kind of take for granted. They're so complex and so important to how the world works.
Right. So, I mean, we've talked about all this stuff, but, the big question is, what happens next?
Yeah, that's the million-dollar question.
What do you think?
Well, I think given all this talk about deglobalization and, the possibility that the global economy might become more fragmented, it's worth thinking about what the long-term consequences might be. Like, how could this change the relationships between countries when it comes to trade?
Right.
How could it affect the decisions that big companies make? And even the broader geopolitical landscape, years down the line. This isn't just about what happens in the market today or tomorrow.
Yeah.
It's about the potential for some really fundamental shifts in how the world works.
All right. So, I mean, for all of you listening, think about that. Like, how could these changes affect you?
Mm-hmm.
How could they affect the industries you follow?
Exactly. Something to really consider.
Yeah. Well, on that note, I think we're going to leave it there.
Okay.
This has been a fascinating, if a little bit anxiety-inducing deep dive.
Yeah, definitely.
But thanks for breaking it down with me.
Of course.
And thanks to all of you for listening. Until next time.
See?
Sound the alarm. I'm coming up. We'll have the ball. I'm sweet like a buttercup. You're a Barbie doll. Show them all what I'm made of. Strut down the hall. Won't stop till I get enough.